This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. More knowledge, more wealth on AM 590, The Answer. Now here's your host, Gabriel Shahin.
Good afternoon. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. Now, I'm a principal of Falcon Wealth Planning, a registered investment advisory firm. We are a fee-only financial planning firm that also manages money as well. But folks, we really specialize in comprehensive planning. It talks about where you are today, retirement, what that looks like, what you should be doing, tax planning, how to avoid it now in the future, estate planning, insurance. Folks, anything that involves a dollar sign, we focus on. We help business owners all day long. We help real estate investors, whatever it is, we can help. Give us a call as we are offering a free financial assessment, folks. There's no cost, no obligation. We offer 1 to 2 meetings, 1 to 2 hours of our time, and we help nationwide. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Folks, there is a lot to talk about today, as now the stock markets have stabilized, especially after roughly a 20% drop, depending on the indice that you are looking at. Why is it dropping? Because the stock market is a leading indicator. Well, what does that mean? It knows what's going to happen before the reality. We're talking recession today for what may happen in the future. By the time you're probably in the recession, the stock market's already recovering, because the definition of a recession is 2 quarters of negative GDP, gross domestic product. And people are freaking out of where to put the money because the stock markets are down. Okay. Gold and commodities are down. Bonds are down. Bitcoin and crypto is down. Real estate is up, and now interest rates are flying through the roof right now. A 30-year mortgage is 5%. So what can you do? There's not many options for you what to do. You're probably going to see stabilization. You've already seen that in real estate. Those days of 20 plus offers are now down to 3 to 4 offers on a home. Institutions have pulled out of real estate. That goes telling you something. That's where a lot of the money is. Some of the smartest investors in the world. They got billions of dollars. So you have to ask yourself what to do, where to put your money. And is a recession truly coming? We just had a recession in 2020. It was one of the fastest ones out there. I mean, the world shut down for almost 2 months. So yeah, it was pretty normal for 2 quarters of negative GDP to happen. So the recession happened. By the time a recession was announced, the stock market was already higher than where it was prior and was up over 20% in 2020. It was up to almost another 30% in 2021. And this year, down about 20. And people are freaking out. The consumer sentiment is so weak right now. They're not happy. I don't know. Maybe they're not happy because of the price at the pump. Gas is high. They're not happy because inflation is going up. They're not happy because of war with Ukraine. Yet again, same story. They're not happy because of the political climate of Biden or whoever. People are not comfortable like they used to be. So what does this mean? I mean, because we were in one of the worst bond markets in almost 200 years, the start, I should say. Stock market's not making you feel warm and fuzzy. Inflation, you are seeing costs increase. A lot of this has to do with the amount of money we printed. A lot of this also has to do is because what's happening in Russia. And a lot of other countries are now hoarding what they used to export because they're scared that their supply may not be there. It's not looking good. And for people in California and other states, they're looking at a water shortage. They're telling you you can't use your water as much as you used to. They've already done blackouts in California where they said you can't use your electricity. They turn it off in the middle of summer. Things are not looking that hot. I'm serious. So what does this mean to you? I can see why you're not feeling great, warm and fuzzy. I don't blame you. Heck, the more I'm talking to you, I don't feel warm and fuzzy. We are survivors. We figure it out. That's who we are. That's what we do. Do not detract. Do not detour. Do not get conflicted with all the noise that's happening. Things remain the same. You're still going to surf the internet. You're still going to eat food. And you still are going to work for a paycheck. Volatility is normal. It's healthy. Our governments say it through monetary and fiscal policy. They control recession and expansion periods. Nothing has changed for centuries. And not just our economy, but others, countries as well. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today we are talking about this soon to be recession. Is that what people are saying? I mean, watch CNBC all day long here in my office, and I see that they're talking, everybody's talking. Why? Because markets are stabilized, of a recession. They talk about retail not selling as much, consumer sentiment not as happy. Like baby formula, I feel bad. I mean, we got a 9-month-old at home. I mean, it's sad that you can't even get formula if you wanted to. 90% of the country is sold out of baby formula. That's insane to me. This is a supply chain that started from COVID and that is now currently being affected by Russia and Ukraine. There's a lot of oils they produce, fertilizers they produce, a lot of things that really has a trickle effect. And now Turkey is getting involved in this and hoarding their stuff. Same with India, same with other countries. So you have to ask yourself, are we feeling that great? The answer is no. And by the way, it's not the first time. And if you look at everything I said, all that means is prices are going to go up because it's going to cost more to get those goods necessary for your products that you buy. Cosmetics are going to go up. Fruits and vegetables are going to go up. Plant those fruit and vegetable trees. That's what I did. Now, unfortunately, I did it too late. And who's to say this actually continues? All I'm saying is you want to prepare. My point to you, of course, is that this recession, for those watching on the podcast on YouTube, this recession, you have to factor is 2 negative quarters of negative GDP. What if the 2 quarters of negative GDP don't come? Just by the simple fact of the prices are increasing. What does that mean, Gabriel? Well, let's say this. Let's say people are still pumping gas, but they're driving 10% less. Okay. So let's say the companies were netting before, after all expenses, $1 billion. Okay. But now their margins have gone up more because they need more than $1 billion, because $1 billion today doesn't buy you as much as $1 billion did 2 years ago. So now the prices have gone up on oil. You've bought 10% less. But if their prices used to be $3.50 and now are at $7 in Los Angeles, well, they're now netting, let's just for simple math, say $2 billion. Even if it's 10% less, let's call it $1.8 billion. $1.8 billion is bigger than $1 billion, right? 80% more. What's my point? We might be seeing one of the first silent recessions, because you won't see an actual recession because you won't potentially, this is Gabriel Shahin's opinion, of a silent recession because you won't see 2 quarters of negative GDP. Inflation alone may carry it over where you'll still see positive GDP. What does that mean? That means you have to find something to put your money in. Because right now, I see a lot of insurance companies out there trying to sell you junk, trying to scare you of the markets, trying to tell you what I just told you earlier in the program, that bonds are down, stock market's down, gold is down, Bitcoin is down, everything, and real estate might be going down, especially with rising rates. So you must ask yourself, what does that mean for you? Well, you have to find a place to put your money. Because if it's in the bank, you've lost 15% because of the 7% last year and 8% this year. That's a serious issue. And you feel it more than that because the gas price has gone up way more than 15%. Depending on what you do and where you work, That could be a problem. Depending on what you buy for food, you see it in Costco. You see prices all across increase in value. So you probably feel more than 15%, not including home prices. So what to do? What you have to do is start thinking to yourself as a business owner. If you owned Google or McDonald's or any company that's out there, Johnson & Johnson, Home Depot, the big name companies, Walmart, whatever they are, as the owner, you have to survive. So what are you going to do? As these companies are looking to be and stay profitable, and more importantly, stay relevant, which leads to profitability, they have to pivot. And you've seen so many people, so many companies pivot during the recession by offering delivery services, virtual services, drive-through services, whatever it is, they pivoted. Why? Because us humans are survivors. You didn't think you'd be comfortable on FaceTime or Zoom, right? Well, now look at you. You are comfortable on FaceTime and Zoom. You get my point? We find a way to survive, and that's not going to stop, nor will it change. You have to understand that the global economy, corporations, and capitalism is built in America for survivors and for those that have the expectation and need to grow and be more profitable. And the number one hedge against inflation, for the reasons I just mentioned earlier about rising oil prices, is the stock market. The stock market is your safe haven and it is your protection. And I'm going to go over the reasons why when we come back. We're going to take a quick break. If you need help with this, if you have any questions, give us a call. That's what we're here for. We're happy to help folks. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. Folks, be right back after a few words. Stay with us. Welcome back, folks. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. And today we are talking about potentially this recession that everybody's talking about. I like to call it maybe a silent recession because prices have increased so much. Even if people are buying less, the increase of pricing, which leads to increase of profits, may have us avoid, by definition, a recession of negative GDP. So we may be feeling like a recession, but it may not be actual an academic recession, which is why I'm calling it a silent recession. So what we talked about, one of the main pieces to that is inflation. And inflation is a very big piece of this and how this affects you. And we talked about also the hedge of that because we know prices of everything has gone up, literally everything. I actually trying to think of something that has gone down in value. I really can't think of it. Even the Dollar Tree is now $1.25. 99-cent store sells things for $5.99. They're still going with the 99 cents, but now they just end in 99 cents. You get my point. Things have gone up in prices, which means these corporations that are selling it to you, which you're still buying, even if you buy less than you used to, because you're just not as comfortable as before, they're making more per item because these corporations here, these billions of dollars they used to have, $1 billion doesn't buy them the same as they did 2 years ago. So they need more than $1 billion of profits because they have the purchasing power. So that leads to the stock market still being the best hedge against inflation. And it has succeeded against all levels of recessionary periods, whether it's through the financial crisis of 2008, the dot-com bubble of ridiculous overvalued corporations, whether it was 1995, which was in the 80s, which was in the 70s. Folks, you name it, the Great Depression, which was fabricated lies of stocks, wars, World War II, and World War I. It has survived. World War II is more relevant for the reason of the Securities Act. World War One, they could lie and say what their companies were making. So my point to you is it has survived. Now, the question you must be asking is, okay, what should I be buying? Google, McDonald's, Johnson and Johnson? What companies should you be buying is the main question. The answer is not any single company, all the companies. And that's where an index comes in, because an index will never go out of business. Radio Shack went out of business, right? Washington Mutual, Lehman Brothers, Bear Stearns, WorldCom, Enron, those went out of business. And businesses will continue to go out of business. Money doesn't disappear, folks. It doesn't evaporate. It shifts. That's all that happens. During the pandemic, what did you do? You weren't traveling, but RV sales went skyrocket. You weren't going to the movies. There was more subscribers to Netflix and Disney Plus and Hulu and so on. Restaurants, you never go eat. You sure bought a lot more at Costco and some of the other grocery stores. Money shifts. Once you understand that, that's when you start making money. And by being invested into the global markets, even though the markets are down now, you should look at them as a sale. Because if you liked investing 6 months ago, you should love right now. This is the time you should be making those shifts to investing, adding money, and knowing that volatility is normal. If you look at any volatile period of time, it is normal for a recessionary period, and we come out stronger than ever. Why? Because we are survivors, and our government rewards us for that. Whether you're pro or against, whether you think we're going communist or socialist, whatever it is, our current government is set up where if you have an idea, you can start your own business without government approval and move forward. And you can be a self-made millionaire or even billionaire. That's how our government is set up. Simple as that. So you need to be positive about what's going on. And these companies their goals are to make money by selling us a product or a service. Think about the company you work for, even if it's a hospital, a nonprofit. You know better than anybody, they still have to stay profitable to be in business so the hospital can stay afloat. They have to, even if it's a nonprofit, a county hospital. That's how they work. And you know it. These are not nonprofits or for-profits, private companies or corporations. We're talking about organizations. It could be something as simple as your religious church or synagogue or mosque, whatever it is, temple. It could be a place where you know there's checks and balances and they have to pay for electricity. And there's income, we call those donations, that are coming in. You're going to find a way to survive. You have to in that organization, for-profit or nonprofit. So participate. Don't be fooled or scared by the local advisor at the local banks trying to sell you junk, insurance products and annuities, trying to say they guarantee you can't lose money. This is sad. And I see this all the time. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth. You're on every weekend talking about all important topics of personal finance. Today, we are discussing the simple concept of capitalism and the simple concept of the stock market being your best hedge against inflation. And even dare I say, recessionary periods. Because what has gold done in the past 20 years? That's the best 20-year period they had, was the last 20 years. Haven't done much, especially when you compare it to the stock market. What has bonds done? What has real estate done? Even in California or Texas or some of these high-flying states where people migrated to. The best asset class is the stock market. Why? Because these companies' goals are to make profits faster than you can in real estate. There's really very few Fortune 500 companies that actually own the real estate they're in. McDonald's is one of the few. The rest lease it. Walmart, Target, Costco's. They're putting millions of dollars of solar panels on those roofs of buildings they don't even own. You get my point? Because they see a better investment instead of putting in real estate within their own company. These are companies that you and I invest in, in the stock market and the index is saying, I'm not going to buy real estate. I'm going to lease it and go reinvest into my own company. You know who else does that? Local business owners. If you're a business owner, you do that. Very few of them buy the actual building that they're in. The only ones that I see is diversification because they have so much tied up or they have money in the stock market. They have a lot of cash. They want to diversify out into other assets. That's why they do it, not because they think they're doing better. Falcon Wealth Planning owns a 40,000 square foot commercial headquarters. We own it. That is a very expensive property in Southern California, a Class A building. Why is that important? Because that was a form of diversification. If they would have put those millions of dollars back into the company, they could have grown at a much faster rate, but they wanted stability. They wanted to do their own versions of tax planning. Sometimes it makes sense depending on the own success of you and the owners. This is why it's important to talk to a tax planner. This is why it's important to talk to a financial planner. And folks, if you need help with that, that's what we do on a daily basis. We welcome phone calls. Doesn't matter where you are. We service all across the country, folks. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. We can help give you a free assessment of 1 to 2 hours, 1 to 2 meetings at no cost to help relate this show to your specific situation. Because yes, whatever you see on the TV will be talking about recessions. They will be talking about negativity. They will be trying to scare you. The negative of capitalism is people taking advantage of you. That's why there tries to be government intervention. So people make fun of America for turning socialist because that's what socialism is. The government tries to make decisions on your behalf. So that's a negative is we put the rating system on our news and they try to scare you into doing something stupid. And we all fall for it. We all get nervous. Why? Because we're human. And they spend millions of dollars of analytical research to tell them how to get to you psychologically. Don't be a pawn in their game. I see it far too often. Be strategic and be disciplined. This is why it could make sense for you to work with a financial professional. They will keep you disciplined. With your money, you're nervous. Heck, with my money, I get nervous. That's why my firm manages my own money. I get nervous pulling the levers on this stuff. I don't know when to buy or sell. Like I do, but it's my money. So if financial professionals are doing it, you got to think, if you have pension funds of hundreds of billions of dollars hiring professionals where they can easily do it in-house, but they pay their fees to do it. Why? Because they see the value in professionals, non-internal. I recommend that you get a second opinion of what you're doing. Even if you want just a pat on the back, even more importantly, if you see things that you're not doing and recommendations that you should be doing. You make the decisions if you want to do them or not, but that's up to you. Give us a call. We can help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Would be happy to help. Folks, that was a fast show. Lots to talk about as always, but we appreciate you tuning in with us every weekend as we talk about all important topics of personal finance. Remember, our goal is to give you the knowledge you need to increase your wealth. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. You can always join us on Spotify or podcasts through Apple to listen to our show every week. Our goal, remember, is to make sure that you are prosperous and not being taken advantage of. Enjoy your week. Have a great weekend, and God bless.